Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And we will have some news this week as Tori has returned from his trip. Welcome back, Tori.
Yeah, you guys need a little fundamentals on the show. It can't be all about these boring charts you put up.
Do we?
Yes, Miles, we do, because as you always say, ultimately you're going to see the support and resistance levels hit in your charts. You just don't know how quickly.
Exactly.
Nor do I, but we also don't know what the driver will be.
And I will give you credit there, because those drivers do speed up or slow down the markets, push them into those support and resistance levels, and boy, it fascinates me how often that happens right coinciding with some news source out there.
That's right. There you go. So when gold responds to or reacts to geopolitics and politics and monetary policy, fiscal policy, employment and unemployment numbers, or just economic indicators, those are the things that we're looking for to try to give us a little bit of a sense of the timing as to when we might see your figures actually hit.
Sure, and as we're seeing these gold numbers play out, and we've been talking about this kind of sideways compression after we took the drop in early August. So what are some of those fundamentals that you think are keeping gold hard stuck here? I mean, I've been talking for further decline in gold. I still think that's coming, but we haven't seen it yet. What have you seen in the last couple weeks news-wise that's causing neither a speed up or a slowdown in the movement of the price of gold?
Quite honestly, I think it's a lack of news. Everything's tending to be focused on the election right now, and there's no groundbreaking, earth-shattering comments or predictions or policies that they're saying are going to take place that's going to change a whole lot. Also, you're seeing some general increase or improvement in the economic numbers, to be fair, and you're seeing a general decrease in the concern over the COVID-19 virus. And so those two things are actually lending a little bit of support as to why gold hasn't climbed higher in this phase. There's nothing coming out of the Federal Reserve. I think they're going to stay relatively quiet between now and the election. You have good employment numbers coming out. You have a 20% increase in expected GDP for Q3. Granted, we were starting from almost negative 50 or whatever, but you've got those positive items coming out in the news. And at the same time, this tends to be when there's not huge policy changes from the central bank. When you're in an election cycle like this, it tends to get a little quiet, and they certainly don't have any need to do anything.
Well, and if anything, they're going to emphasize keeping the market stable or slowly up, which we have seen.
That's right. And so we've had a huge increase in the Fed balance sheet here in the last week, so things aren't totally rosy. To your point, Miles, they're going to try to stimulate until there's no further need for that stimulation, and we don't know when that ends, because it's going to be far too politically sensitive to talk about raising taxes, right, or pulling from the middle class or doing anything to make the citizenry repay some of this debt. This is going to have to be something that plays out in the future years. So in the interim, it's going to be the central bank that's coming to the rescue, and you're going to just watch the gross federal deficit or debt increase.
So by citizenry not having to pay it out, you're actually talking about future generations having to pay it back.
That's right.
Because that's how inflation works, right? And that seems to be the world we live in, as long as it's not my problem.
Yeah, you're paying back debt that was generated 20, 30 years ago. So am I. And our children will be 20 or 30 years from now if there hasn't been a reset. So I get a lot of questions, is there going to be a gold standard coming back in Trump's second term if he wins re-election? Is there going to be a dissolution of the central bank? I'm sure you guys are getting these questions too. There's all these conspiracy theories, and some of them aren't even necessarily conspiratorial. They're just trying to be predictive. And the reason that those questions are being asked is because I don't see how it's possible to repay some of this debt.
Right. It's interesting you bring that up, because I was thinking about that, and it seems to be just in the last couple weeks that question has crept up again. And there have been years in the past where that seems to be a running theme, where, like, for instance, the Cyprus-Europe situation, when Cyprus failed and the European Central Bank had to step in and bail out Greece, those questions popped up at that time too. So it seems to be this isn't a unique or new thing. There's nothing new under the sun, but sometimes events happen that bring us to the question of, do we follow that ultimate solution by returning to a stable currency? And the way Washington, D.C. looks to me right now, I think you're talking, 535 people. You'd probably have to vote out about 534 of them to have something like that happen. So it's unlikely. I think inflation continues, and the trick really isn't balancing between inflation and deflation. The trick is between balancing inflation with hyperinflation. And that seems to be the only balancing act the Fed does these days, is how do we print as much money as possible? And the key is the as possible without letting it run away.
Yeah, and I don't even know if they know what that number is, right? So
they just know they haven't hit it yet.
Right, but they also know that deflation is far more dangerous. That term inflate or die, the economy dies if you don't inflate basically your way out of trouble. And what they do is they try to buy time. They're kicking the can down the road, yes, but they need a true fundamental economic turnaround. And yeah, we added 1.37 million jobs last month, and the unemployment rate fell to 8.4%. Those are positive numbers. So if, in fact, they can do things that are stimulating in other ways to the economy, then it buys them time. In the meantime, the Band-Aid is the money printing. And right now it's falling on the shoulder of the Federal Reserve until we get election results. And then I guarantee whichever president is in office, there's going to be massive spending. There's going to be massive return to work stimulus packages at that point. And until then, those are the types of numbers where they can even get away without doing another coronavirus stimulus package now, Kudlow saying, on behalf of the Trump administration. So if there's not one, you should see gold stay somewhere stable in here.
And in buying that time, exactly like you said, that's why we're seeing gold relatively stable, silver relatively stable. Now, we don't have people running back into the markets, or we'd see things like gold coming down, and we'd see the U.S. dollar staying stable, but we've seen the opposite. So the dollar's been down. Gold has continued up until a couple weeks ago, where we've now kind of flatlined, and it's going to be looking for a breakout position up or down probably in the next couple weeks.
And the dollar was up in that period of time, 1.5%, right?
Slightly, yeah. So the dollar has had a rebound, but a lot of that I think can also come back to the charts and people playing that short-term game. Don't forget the Forex markets are the biggest markets on the planet. There's more money traded in those currencies than anything else. So there is a lot of trading taking place in those currencies, and that's why Robert's been bringing up this dollar chart for the last couple weeks, going back to some trend lines that got set up years ago.
So that answers a lot of the question, Robert. Why don't you talk a little bit about the dollar and just what that recent price action has been the last couple weeks?
Well, yeah, hey, I am here, guys. I've had my hand up the whole show. You've just been ignoring me talking about fundamentals. Here's the chart of the dollar, and it looks like it's clearly doing what we were talking about last week with the trend in place, that the dollar looks like it wants to rally a little bit from here. Dollar has broken just above the declining trend line that it had. And like what we said last week, that'll put some downward pressure on the metals market probably. And so that's going to be your opportunity to be buying metals, I think, over the next month or two as the dollar tries to rally a little bit here and hopefully put some downward pressure on the metals. So yeah, that's the dollar. Looks like it wants to rally. Metals hopefully pull back. Do we want to jump into the charts of gold at all this week?
Didn't we?
Charts? We do charts
I've
every
mentioned
week.
the charts a few times, right?
Gosh,
I thought we were just going to talk about fundamentals this week.
Fine. All right, I'll see you guys next week.
Yeah, well, short term on the charts. Last week I did have a shorter term compression, which we did break below, but it didn't hold below. It reversed back out. So we did have a double bottom, but I've moved my compression line out a little bit. I expect us to stay within it or very close to it for the time being. As Robert mentioned, with the dollar looking like it's going to rally, the equities markets have turned down. We gave the NASDAQ a pat on the back, and I jinxed it, which we kind of knew would happen. I mean, the whole point we brought that NASDAQ chart out was to congratulate it for hitting what was clearly going to be an interim high, and it absolutely has, turning around, dropping, about 1,200 points in the last week. So big 10% or so drop in the NASDAQ. The Dow never broke those previous highs and has turned back down. The transports slightly did and have also turned back down, or at least the most recent high.
But the transports actually didn't go to a new all-time high.
Correct.
They were still, even though it went to a new interim high.
Just got back to where it was before the March
Exactly.
fall.
I think somebody last week in the comments was wanting us to talk about the transports, and still the transports have not gone to a new all-time high if you go back a year or two. to the previous all-time high.
So if you take all those pieces, right, a short-term strengthening dollar, short-term weakening equities market, and gold standing strong and holding sideways here, I think that just increases the long-term expectation, or at least our long-term expectation, that gold is in a very firm bull market right now. It is not turning down with the equities market like you would expect it to do if the dollar does continue to rally. So even though short-term we're all kind of hoping for a gold pullback, let's emphasize the word hoping there. That doesn't mean it's going to happen.
Right, and remember too, it's on improving economic numbers. So the fact that this trend line hasn't changed, I laugh about the charts, but honestly, this wedge pattern that you're showing here has been really fun to watch because we continue to touch the edges of that thing, and it's building, to me, potential energy. The more narrow it gets, we're building towards a breakout one way or the other. And so hang in there, let's see what plays out, and continue to keep your eyes on the charts. Again, it's just a matter of the timing.
Yeah, and I don't know how many times I've said this over the last couple weeks, but I'd love to buy into some gold at 1785 or 18 and a quarter. But when it's $4,000, are you going to care that it was 1900? I don't think so.
Same thing with silver. Silver under $27 an ounce to me is just a steal. So as we fluctuate in this range on silver and its pattern that you're continuing to talk about, you're going to laugh when you're even in the mid-30s that you were able to get it in the 20s, and people are worried about 26.50 versus 26. And so I would say, look, I wouldn't wait on that. The ratio is trying desperately to get down below 70 to 1, that gold to silver ratio. And as it comes down into that 69 range, it tends to pop right back to 72. And that's the other thing to keep an eye on. Anytime you're getting that ratio above 72, that's a buying opportunity for me right now. We've created a new channel of a ratio trade, and so grab your silver based on ratio, not on spot price. But why don't you show us the spot price action on the silver?
Silver looks similar to gold, but obviously not identical because it does look more like a stepping up pattern. Since August, we did have a higher high there at the end of August, right beginning of September, and then we've turned back down. So we are holding the same. We're holding an increasing lower trend line that we keep coming into. Started back at the beginning of this run, kind of middle of July, hit it there at the beginning of August, and then hit it again here this past week. Same thing. I'd love to see silver push back down a little bit lower. I'm still fairly confident it's going to, but silver looks strong. Outside of taking in some assumptions, if you were just looking at the charts, there's no real reason to assume a lower price in silver, just looking at the silver chart over the last couple months. Now, you stretch that out over the last 18 months, and I think it's pretty clear that silver needs a correction. But just short term on silver, it looks very strong. Then closing out the metals, platinum looks very similar to silver, higher highs, higher lows, stepping up. Still not back to where we were at the beginning of 2020, but we're getting there. And palladium looks like it's kind of running out of steam. It put in a double top. It kind of looks like it might be turning back down here, but at least the way I look at charts, there's really no way to tell this week. We'll just kind of see how the price action plays out over the next couple of days.
The last thing we'll note here in the markets is that the oil price has dropped below 40 and has slid down to around 36, I believe, today. What do you attribute that to? Is that a leading indicator that the economy is slowing? Is that a leading indicator that COVID cases are going to pick back up? What do you think's going on there?
You know, they say that it's a supply issue, and the Saudis are actually talking about price cuts for October. And so that's really signaling sort of wavering demand. And you're right, with the transports turning down or whatever else, I think oil can be a great predictor of economic downturn. And if that happens right before the election, that could be negative for an incumbent president, but it can also be very positive for an incumbent president because there's a huge presidential approval when it comes to the Dow and the gasoline prices at the pump. So if the Dow stays up and gasoline stays down, that's a very favorable indicator for an incumbent president.
Yeah, but let's not forget the price action since March. We're talking about the deadest of cat bounces. I mean, you're talking about oil going down almost to zero, and in some indicators, zero, or just a few pennies above.
So there are actual rankings of how dead a cat can be?
Yes, cats can be, because they've got 9 lives, so you can have multiple deadnesses of a cat.
Good point.
And this was like 10
the deadest cat.
Yeah,
okay.
The deadest possible cat, like 10 whole dead cat.
Yeah. Does a dead cat bounce off an oil slick?
Could be.
Yeah, that's a good
Could
question.
be.
Or just
now
slides.
I'm thinking, now I'm the deadest of cat bounces.
Oh, goodness.
So, but you're still talking about oil bouncing back up to some previous levels it was at before all this happened. So take all that out and let's go back to where oil was December, January, and then where it is now. And what does that chart look like? You're still looking at oil up.
From January to now, not necessarily. It got to 40, and it's almost like that's where it found its home. And I don't know if that's price manipulation. They needed stability from an employment in the oil and gas industry, that sector, or if it's something that they didn't necessarily want it to go higher, or if it really found its real place in terms of supply and demand, particularly the supply. That was the real issue when it plunged to zero and negative, was an oversupply.
Right.
With it coming down as much as 9.5% here recently, it should be doing that if the Saudis are lowering prices. And so you should see this turn down effect. At the same time, like Robert's saying, I think it can be an economic indicator, but it can also help stimulate the economy. So sometimes it can be intentional manipulation just for the sake of making our out-of-pocket expenses on a day-to-day basis lower. It's one area that you're actually witnessing some deflation in as all these other asset categories are inflated.
Sure, and I think that's the key. I mean, we've had a glut of oil worldwide for a long time, and then all it took was one little international shipping lane shut down to see that price just drop. So, yeah, I think we're just getting back to normal on oil pricing, and maybe it is a little bit too high compared to what the supply levels are.
Well, in the metals market, there's still a lot of demand, and we have supply. So if you want to give us a call, we're at 800-525-9556. Follow us on Twitter at ICA Gold. Like us on Facebook, McAlvany Financial. Find everything McAlvany related at www.mcalvany.com. Thanks for listening. Have a great week.